Now, hope this point is clear. I was just about to here the summarized point that we can, if you want to wish to note down, please note down this article, Article 28 of City Law. Please, I shared here. You can take from here also. Copy this because from recording may be not easy. I was just trying to, this example we already did. Yes, this is the example during the last session. The people ask about the some one of the point that is not getting clarified. They think the in example two, the five how to carry forward this. Why we are doing this carry forward. I hope you guys did some exercise on that. Okay, earlier in the previous example, I updated and shared with you guys also due to some typo error, the figure was wrong. Maybe that is the confusion. Okay, just quickly, this is the interest capping rule. Interest capping rule, we already study the interest capping rule. First, I'll just give you the quick overview of the interest capping rule. Okay, the interest capping rule, the quickly, we want to see the 30% of the EBITDA and the 12 million. The higher of, either one is a higher of, that amount is a threshold. That is a cap that you're gonna use. In this example, the EBITDA is 100 million, net interest expense is a 35 million. Okay, here the EBITDA is 100 million, net interest expense is a 35 million. Solution, how to calculate, what is the threshold? Solution to calculate the cap, how much the allowable, how much the allowable. So the EBITDA capping rule, he's saying 30% of the 100 million is 30 million, 12 million is the safe harbor, the minimum. So which one is higher, 12 or 30? Here 30% of this EBITDA we taken. So now 30 is a bigger amount. So we can, this is the our limit for the interest capping rule to take the benefit. From our interest expense is the net interest, which means we may have some income. Let's say we have the 40 million interest expense and 5 million is the income. So if we net off, so 35 will be our net interest because 40 million expense minus 5 million income, net interest is a 35 million. Now 30 million is the allowed for this year and balance 5 million will be carried forward for the next 10 years on the FIFO basis. So here the 30 million is allowed. This is the disallowed carry forward for next 10 year. Now the in same example in year 2, we're gonna see that in example 2, we are saying the profit before tax, we'll see how much the disallowed interest expense is written the type error. The 5 million is came back from previous year. Now the year 2 is gonna start here. Net interest expense is a 28 million. In the last example, in the last session, here was typo error, that is the 25 million. It should be 28 million. Anyhow, if we have the net interest is a 28 million, So then from previous year, that is, this is the 5 million that is disallowed, we carry forward. And this year is brought forward from year one. So total is a 32 million. 32 million. And this year EBITDA is again 100 million. Now we have to apply the same calculation. Okay. Which one is higher of 30%? 30% of the EBITDA. EBITDA is 100 million. So it is coming 30 million. So B is a 12 million. So which one will take the as a limitation, as a cap? 30 million, because 12 million is a minimum safe harbor. Now our limit is extended. So from 30 million, what we do first, against this limit, first we will use the current year expense. The current year expense. Okay. Interest expense is what is written internet, but this is the interest expense. Year two is a 28 million plus brought forward is a 5 million. Total is 33 million. Now here we think this 2 million fall under disallowed and deductible limit. For now from how much is allowed? 30 million. 28 from year two and 2 million from the previous year, that is carry forward. So total 30 million we can deduct. So now the balance, if we take the 2 million from here, take 2 million from here, balance will be 3 million. So we're saying the 3 million, 2 million fall under allowed or deductible limit, because 28 plus 2, so this is the 30 million. Now balance is the 3 million that again carry forward. Okay, the carry forward now it will be for 9 years, because 1 year is already passed, because the previous is came back. The rule is from the year end, FIFO basis. For this amount, maybe next year again is coming, the year where we have the interest expense that is disallowed, for that amount from that year, we have to calculate the 10 years, not for the overall amount. Maybe the next year also is some disallowed amount will come. But first we have to consume this. First we have to consume current year, then we have to consume the brought forward one on the FIFO basis. Even we have the another expense, first we utilize this, then we utilize other one. Here, for understanding purpose, 5 million brought forward, 2 million is used, 3 million is a carry forward. Why? 28 million is a current year expense and 30 million is a limit. So this is the why out of 5 million, 2 million is used here and 3 million is carry forward. Thank you guys for today. But I'm just gonna be